We are going to talk about how to spot key levels in the market, be it price action or SMC. Most beginner traders, when you look at their chart, it is looking something like this. This is wrong because you won't know where price is coming from, where price is going, and areas where to get in on the trade and benefit from. Okay, so that is what we're going to talk about in this video. When it comes to key levels, we have two types of key levels. Okay, we have the major key level and we have the minor key level. Major key levels are the key levels or the zones that are spotted on a higher time frame. That is the daily, weekly, or sometimes the 4-hour time frame, depending on the type of trader you are. That is what you call the major key levels. And when you are on the smaller time frame, the zone that you're gonna see, like this zone that you're gonna spot, that you're not gonna see those zones when you scale up to the daily time frame, are what you call minor zones. Okay, so that's what we're gonna talk about in this video. Subscribe to the channel and comment down below if you have any question, and also like the video. So what validates a key level? All right, so what makes a key level valid for trading? Multiple rejections. So looking at this pair right here, for you to spot that this key level is an important key level or a strong key level, you need to look out for multiple rejections. All right, now look at this pair. I'm gonna be using the GBP/USD for example. Okay, now we have price created this zone right here. Okay, push to the upside, price come to the same area, push to the upside. Now you can see price created this rejection around here, came to the same area, rejection there, and now pushing up. We are in the daily time frame. Okay, so you can see there anywhere that there is multiple rejection, price react to this area. So those areas on the daily time frame or the weekly time frame is what we call the key levels. That is the major key levels. All right, so you can see this area here, a major key level, a major key level, a major key level, major key level. So what you want to do is you first need to mark only the major key levels in the market. So spotting to this, we have this area to be the major key level, while we have a massive reaction around that place before price push to the upside, something like this around here before price push to the upside. And you can see in the future price came back to the same zone and now it's pushing to the upside. Okay, you can see we have this area here to be our second key level in the market, and this will lead us to the number 2 option on our list. That is the reaction of price around that zone need to be massive. Okay, you can see price got here, there's a massive drop to the downside, causing this break, a change of character here, break of structure around here. Okay, so this massive drop to the downside is indicating to us that this zone is actually a key level. When it comes to ICT, they will tell you this is actually a supply zone. Okay, but it can be resistance zone with price action or a supply zone with ICT people. Okay, now we have a massive drop from there to the downside. All right, option number 1 is there has to be multiple rejections around the place for the zone to be classified as a valid key level. Okay, and also price movements around the area needs to be massive. Okay, the massive, you can see here there's a massive push to the upside, price is rising. So when you have been able to identify your massive key level like this, that is where you're gonna know that any zone around this place is gonna be, a minor zone, a minor key level. So price is going to break and retest the minor key levels, but at the end of the day, it is coming to this high right here. Okay, so you can draw the minor key levels and spot the break and retest in the zone. Then you take your trade from there to the upside, something like this, to the upside. Why? Because this place is, there has been a reaction around here, a reaction around here, reaction around here, reaction around here, and I'm pushing to the upside. Okay, and now we can see we're having lower high, lower low, lower high, lower low, lower high, lower low, and now price has shifted and is creating higher high, higher low, higher high, higher low, and I was going to create a higher high, higher low, pushing to the outside somewhere around here. Okay, so you can target this previous area here, because when you scale down to the smaller picture, this area is going to be your minor zones. Remember, this is a minor zone or minor key level or minor zones. So you can target that place to be your take profit 1 and you exit the trade like this. Okay, option number 1 is there has to be a multiple rejections around the place to take the place as a massive key level or a strong key level. Option number 2 is price movement around the zone need to be massive. Okay, and the last option is the zone needs to be nearer to the current price. All right, looking at this one, for example, we have these zones around this place. We have this area here to be another key level. Look at this area. This area here is a key level. Okay, this area here is a key level. Why am I not drawing the zone around this area here? This area is irrelevant to price. We want to know an area or key level that is relevant to where the current price is, and that is the current price around this place. Okay, so any zone that is somewhere far away, like this zone or key level around here, even though it's valid, we don't cherish that zones. We don't put them into consideration because it is far away from price. All right, you need to be dealing with the zone which is closer to price, or the key level which is closer to price. If you've been able to identify your major key zone, that is where you know where you are trading to. So most of the time, you need to know where price is heading to on your key levels in the market before you go with the flow. Now you can see we have TP hit right here, and price is coming down to gather more energy and push to the upside. All right, so every zone in this pattern, every zone in this price is actually a minor zone. All right, so that is how to identify your key levels in the market. Any place where there's rejections, massive rejections in a higher time frame, they are major key levels, they are major zones. Okay, and any key level that is in the 30 minutes or the 1 hour or the 15 minutes, they are minor key level based on the rejection they are giving, based on the fact that they are they are talking about price, that is they are nearer to price. Okay, based on the fact that the reaction around that place is very, very massive. You can see the reaction around here is very, very massive. Push. You can see reaction around here, push. So you can also take this zone here to be a massive key zone around this place also. And when price came there, what happened? We saw a massive push. Price drop from here, break, retest, a drop. Okay, so guys, subscribe to the channel, comment if you have any question, and this is just a short one. I'll see you guys in my next video.